Welcome to the Flood Racing Money Audio Commentary. This is Owen Tracy recording. It's at 3:19 p.m. That is Central Time. Today is March 24th, and we've had a busy day in the market. The Nasdaq was up a couple of percent and closing above the 20,000 level, so that is a rather significant rebound. Now testing the region of the exponential 200-day moving average, but I think a lot of people will have been paying attention to that 20,000 point level. Then the dollar is also unwinding a short-term oversold condition, and then bonds sold off. So we're back into an inverse correlation between bonds and equities, which is the kind of condition that people had given up on in 2022 when everything went down together. What we're certainly seeing now is the days when the stock market goes up, bonds go down. And then there's also all the noise around tariffs. And what are the tariffs going to be? Are they going to be universal? Are they going to be targeted by sector? Are they going to be tiered? And what countries will they be applied to? And the expectation is that there'll be a big release on April 2nd. Now, we've certainly seen that tariffs have been imposed on lots of different countries, but particularly China, Canada, and Mexico. And there's a lot of reasons being circulated as for why those countries have been targeted. And there's been talk about it being all about fentanyl and the flow of migrants. But there is an alternative way of thinking about it, and it is simply that they are three of the largest trading partners with the USA that enjoy surpluses. So all of this talk about tariffs and fentanyl and drugs and the flow of migrants is really about trying to contain the trade deficit. And that does beg an important question. Are tariffs a good tool for doing that? Well, I guess we're going to find out in the next while. But one thing we can certainly say is that whenever it looks like tariffs are going to be onerous, then the bond market improves and stocks sell off. And when it looks like there's a more conciliatory tone adopted, well, then stocks go up and bonds go down. Now, does that mean, and I think this raises a bigger question, does it mean that that's going to be good for earnings? Or is it more that if we have very aggressive tariffs, that it